We've got Atul Suri right here with us in our studios. Let's discuss market trends, outlook on individual stocks as well as sectors. Atul, good to have you here in our studios. I see you've got your sheet prepared. Why is that? Are you adding a lot more stocks to the portfolio?
I have a problem with numerical ability.
Yeah, right.
That's something better than that.
So just write down something. You forget,
But not bad at all, right? From the March 29 low of way sub 17K,
Yeah,
we made a
yeah.
massive recovery. What next on the cards?
So Aisha, what happens is that just as you can see the screen, you were sounding so bored when you were talking of stocks. Like
What to do?
Yeah. Like when
I
stocks
think
go
it's
up
reacting.
0.5%, you're reacting to it. So that is actually the state of the market.
Yeah.
Really, it is very range bound. It is definitely, I feel, in an accumulation stage. Why I say accumulation is because let's take the global markets per se. So first and foremost, you'll see that globally the markets bottomed out in October. Right? Let's take the S&P 500. It's, I think, a very good proxy of global markets. You'll find that since October of 22, where they were almost at 52-week highs, you'll find that the S&P has making little what we call higher bottoms, or in the sense that it is accumulating. And today it's very, very interestingly poised around 4150 or thereabouts. I feel 4200 is a very good level. And if you look at the internals of the market, really, of course, there's, as I said, not much happening in the index. I very often look at 52-week high and 52-week lows. So in the S&P 500, for every 10 stocks hitting 52-week highs, there's only one hitting 52-week lows. So the internals of the market are improving. It may not show in the index. It may look very boring and placid, but internals are improving. Even if you look at Indian markets, right? I mean, today the market is flat, but the number of stocks hitting 52-week lows versus 52-week highs are in favor of 52-week highs. So internally things are getting repaired. And as far as levels go, just as I mentioned, 4200 for the S&P 500, I feel for India around 18.2 will be important. Why I think 18.2 is important is because, this is kind of the budget time.
Yeah.
And this is also that whole Adani saga really came out. And after this whole Adani thing happened, the markets lost its shine.
Yeah.
We were among the better performing. We were the market actually making 52-week, in fact, lifetime highs. But you will notice that Indian markets have lost their shine. And 18.2 is something which I would think would be important. Hopefully these things would be brushed and behind us. But till then, yes, it could be a boring index. But internally, I think there's a lot happening in stocks. A lot of sector rotation is happening. And as a fund manager, we actually are using these opportunities to realign to new sectors and themes. Because when the new bull market starts, which I think it will be leadership by a new set of stocks, new themes and new sectors. And this is, I think, the very good time to look at, research and realign it.
That's already happening in a way. But first, are we disconnected from what's happening in US markets? Because after the Adani saga was also the entire US banking crisis
issues,
as well, which
yeah.
also, we saw a knee-jerk reaction of. Are we disconnected or are we completely aligned?
I don't think we are disconnected on a longer time frame. We may be disconnected on a shorter time frame because as I said, October, November, when they were almost at 52-week lows, we were hitting lifetime highs.
Yeah.
So at some extent, we kind of front-ended the whole move.
True.
We ran up higher. So yes, we are off. We are 5-6% off. Even those markets are slightly off. So in the larger context, yes, there is overlap. Short-term issues happen. You have a banking issue there in India. As I said, you had the whole Adani problem. So a little bit iffy-bitty, maybe not be a day-to-day kind of correlation. But in the larger theme of things, I think if the US breaks out, which I think is what is more likely to happen first, India sooner or later should catch up. But as I repeat, that the big thing for us at Marathon has been to be able to align with new sectors and themes. We think that the market in India and US is showing new leadership. People are still looking at tech and all those famous marquee names, leadership of the last bull market. But the names that are making new lifetime highs or 52-week high are very different. And I think that the new bull market will have a different flavor. And probably this is the best time to realign to that.
Atul, I know you're dying to talk about those stocks and sectors, but I want to, put the construct first. Dollar index, you track that, right? And considering all the commentary from Fed, a pause from here, RBI as well, It's pretty much in a limbo. You don't know which way rates are going to head.
Right,
Some
right.
are still calling recession 6 months away, whatever. What are you reading on the DXY charts?
So I think the DXY and US bond yields are two things which are very important because
Yeah.
honestly they do decide the larger flows, whether you like it or not.
Exactly,
I mean,
yeah.
when the dollar is weak, it creates a risk on trade. Risk on trades helps commodities, emerging markets, and India tends to be a beneficiary of this. And I think even US bond yields. Interestingly, for all the talk about recession, etc., bank failures, you'll find that bond yields in the US came off from 4 to 3.3, 3.4. Of course, right now they are again a little higher at around 3.6. I feel that that is probably the biggest genie. If that genie remains in the box, I have a feeling that equities, India, US, Europe, whatever you name it, will be well off. So I feel that that is the crucial area. That's, I think, the starting point or the single factor that will really move global markets. So yes, fingers crossed as far as that side of the trade goes. But overall, as patterns are playing out globally, I feel that we are bottoming out. There is an accumulation. Globally, markets are making higher bottoms. I mean, we talk of the US, but look at Europe. In fact, if you'll find that European markets are actually pushing towards 52-week highs.
Yeah, the CAC, the FTSE.
Right.
Yeah.
A year ago, when the whole Russia-Ukraine thing was there, gas prices were zipping, everyone thought like it's the end of Europe. But look at our predictability, that actually it is Europe that is making or leading global markets higher. Yeah. Yes, it doesn't pull its weight. US is more important. But I think sooner than later, the US will also get there. There's an accumulation phase. It's a painful phase. It's a boring phase. Movements are not much. You find a lot of difficulty to cover a lot of stocks and stories. But
Nikunj walked out of the studio. It was that boring, right?
I just wanted to grab
There
a
was
cup of coffee. Nothing in the coffee.
For me, in fact, I just put my laptop flap down and do other stuff because
what's keeping you busy these days?
Honestly, because
What are you telling your clients? Kuch nahi hai.
no, but no,
They'll pull out money. Don't say that like this.
See, you just walked in, right? If you sometimes sit, you can hear. So, Nikunj, what I find that is very interesting is that what I was telling Aisha earlier was that leadership is changing.
Yeah.
There is a lot of churn that is happening. Number of stocks hitting 52-week highs. There are many of them.
L&T, ITC.
Yes, exactly.
You
They are
bought L&T?
decadal underperformers.
You bought L&T?
IT is down, pharma is up.
So just to come to that, which was something which I want to take on, that sectors or themes, because we look at themes and we think 70% of your work is done if you get the theme right.
Yeah, true.
Right? So we find that electrical equipments,
Equipments. Okay.
engineering,
Okay.
these are sectors which have been decadal underperformers.
How much weightage do you think one should have? For example, if we use Nifty as a benchmark, 30% is financial. So you need to stand somewhere closer to it.
Right. You don't have to.
I mean, that's what fund managers do, right?
Yes, but I am not.
Okay. That's what...
I'm underweight. In fact,
You're
shockingly,
underweight
there's
financial.
consensus bullishness on banks. We have banks, but they're more commercial facing.
Yeah.
They're more commercial facing, so we feel that is where the move is. So even if the banking moves with a lower weightage, we will get a bang for a buck because we feel that we are in the lighter space. We actually favor industrials, commercials, hardcore infra, capital goods, very different from themes and sectors that dominated the last decade.
So how do you decide the weightage then? I mean...
So as I said, our largest weightage is electrical equipments.
How much is that?
We have about 15-16% there. We have about
15-16%.
But Atul, that's not an index mover, right?
In fact, as a portfolio manager, my job is not to hug the index. If I hug the index, I am not adding value. Then a person may as well go into a passive fund, an ETF. My presence or my value is only if I can create disassociated outsized returns. And that would come by not hugging the index. So we really do not try to hug the index. And that is why you will have sector bets like, as I said, electrical equipments. I think engineering is another very interesting space. Defense is another interesting space. These are sectors and themes which may not have weightages in the index. But we feel that these are stocks and sectors making new highs. And that is what will create the alpha going ahead. And that is where leadership is. So that's why I've been emphasizing that not much is happening on the index. If you're an index hugger, there's not what happening. Yeah. I mean, if a Reliance goes up, Infosys comes down.
Yeah.
If a L&T goes up and ITC goes up, something else is going down. So net, you're setting off. But in that also, there are a lot of opportunities. Sectors and stocks are doing well. And as and when we come out of this grip, you will find that leadership will come here. And as I said, that ultimately they have been decadal underperformers. They are under-owned.
Now also like
I feel so. I feel that if you look at weightages per se, people have not even got to at par levels. And that, from moving underweight to overweight, when the trend or when the movement happens there, is I think a great opportunity and will give a lot of momentum to these spaces or these sectors.
So if you have to, let's say, talk about the strength in some of these stocks.
Right.
Do you expect them after a decadal underperformance to be a outperformer for at least 3 to 5 years? And we are at the beginning of a multi-year or a multi-quarter outperformance in cap goods, engineering and electrical stocks?
I think so. I think so. Because, we saw that last year.
Yeah.
Right? Look at PSU banks. I mean, last year the index was flat, 3% positive, and a PSU index went up 70%.
Yeah, 30%.
So what really happens is that sectors that have underperformed for so long, people naturally get underweight. And sectors which have done well, people are already overweight. So the shift that happens or the sector rotation that happens actually is a very big trigger. So I think if you get your themes right, if you're thematically correct, 70% of your work gets done. 30% is about picking the stock, but 70%, it's like a boat, If the tailwinds are there, your sales are up, it will take you. You may have the best sail and the best boat, but if the tailwinds are not there, the boat doesn't move. So I feel that getting these themes are important, and when themes change, they become very big opportunities. And I think that this is a stage. I know in the boredom of the index, we all experience that.
Yeah.
But if you start looking at stocks and you start looking at sectors, I think there's a lot happening there.
Atul Suri had a target of 21,500 on the Nifty.
Yes, I do have it. I still have it.
That will not change.
No, I'll tell you what has happened is, Nikunj, it may have got pushed back. I would have thought it would be more front-loaded because the way we were panning out at the budget time, etc., we had absolute leadership, we were global leaders. I feel that this whole Adani thing that has happened, though we are not able to quantify it, but when you have so much wealth destruction, there is going to be collateral damage. There is going to be, somebody has to pay the price. It's not a free lunch in this market. And to some extent, the way India is behaving right now, I think it's a pain and price we pay. So what could have come earlier, I think will get pushed back a little bit. But I do still feel bullish looking at the internals, looking at the way global markets are, that we are headed higher. We are headed higher. May not be a big index move, but focusing on these themes and sectors that we spoke about, I feel will be a big outperformance and alpha generation in the year to come.
What's in your short portfolio? You said that banks
I don't have a short port. I may just be underweight.
What are you avoiding?
As a PMS, we can't go short. No, we are not really. So let's say I'll give you an example, like auto, right? You generally talk about the 3-4 big auto companies. We have auto, we are overweight auto, but we are overweight some of the ancillaries. So such places, we are overweight even FMCG. Like things like telecom, we don't have any positions. Media, we don't have any positions. So these are sectors we are underweight. AMCs, broking, insurance, all places we don't really have. We have zero holdings in those spaces. Because if we create an overweight in some space, we will definitely have to be underweight. As I said, banks, financials, consensus bullishness. Everyone talks about the credit cycle. Everyone talks about clean balance sheets. Yeah, that's good. Everyone knows about it and we know the numbers are going to be good. Even in banks, I feel it is the industry-facing banks that will do well. So just getting into everything and hugging the portfolio similar to the index, I think is not about adding value for a portfolio manager.
Are you close
we have to be
buying
differentiated.
IT yet? Are you underweight there?
We are underweight IT. We just have one IT stock, but that also is a mid-cap IT stock, which is actually pushing to lifetime highs.
KPIT.
What about metals, where that stands?
I think metals also is very interesting. Metals as a sector did very well last year. However, it has kind of corrected. But again, in metals, there are certain derivative plays on metals. So we do have a position even in that space. So as I said, that I personally think that the whole thing is about the whole industrial cycle, the whole engineering, infra, these kind of manufacturing. And this is not just in India. This is happening even in the US. Industrials as a theme, as a sector are doing much better than tech or all the new age businesses. Of course, all the eyeballs and all the stories are about the tech because there's a lot of storytelling you can do there. And
Look
these are boring companies.
At the Apple Store launch.
Absolutely. But these are boring companies and boring stories. But I think that the tide is changing, and I feel that going ahead, these will be bigger wealth creators here.
Right now, the tide has turned for IT. A leader has become a laggard.
Right.
At what point in time you would say that the pendulum of market sentiment, which was only optimism a year ago, is now only pessimism? When will it return back to normal?
I have a feeling, Nikunj, that when I look at the IT stocks also, that the mid cap and large cap are behaving very differently. Okay. Right? If you see the large cap stocks, we have those 4-5 marquee names. You'll find that they actually do not have much happening. The trend seems to be down. But even in the mid-cap space, there are 3, 4, 5 very good names, as I said, which are pushing towards lifetime
How
highs.
many stocks do you own?
20.
20.
Yeah.
And as of now, it is a combination of FMCG?
I think electrical equipments dominates,
equipments.
FMCG, engineering, metals,
Auto
defense, auto ancillaries.
What will force you to relook at your portfolio where the 15% overweight, which is a combination of electricals, engineering and defense, you could be forced to trim it or revisit it?
Two things will happen for a trend to change. One is that the earnings, because ultimately it's earnings that drive prices and it's not the other way around. If prices only move without earnings, it ends always badly. Right? And we have seen that in the last few months with some very, very marquee names. So the first and foremost thing that will trip Nikunj's earnings. Okay. And once earning trips, you will find that these stocks start tripping even in terms of prices. So the confirmation, it's almost like a double barrel gun. Earnings, trending earnings drive trending prices. And when we see a change of trend in earnings and prices, you can decisively say that the trend has changed. So that is the way we look at, we are trend followers. We really don't try to predict because honestly, as I said, our ability to predict and the way the geopolitics are playing out is very, very limited. Is very, very limited. But what is reflected is in earnings, the reported earnings, 3 quarters, 5 quarters, 5 years down the line, in fact, managements themselves don't know because a lot is changing very fast. But even reported earnings and reported price, two things which we know, which are visible. There's no conjecture. There's no difference of opinion. Even if you study that and do and work with them in a disciplined way, I think that there's a lot of wealth to be created. And that is why our style of investing is about trend following. We are not trying to predict the world 5 years later, 10 years later. Honestly, nobody knows. Nobody knows. You can go back and look at predictions 5 years ago and most people have been very, very off the mark. Somebody gets lucky and they're tom-tom about it. But the important thing is that we know the now. We know what the market is telling us now. And if we are able to analyze that properly, that exactly is how we look at markets. That is what trend following is about.
Okay. Two charts, Brent as well as copper. What are they telling you? Because Brent no more is at that comfortable level. I mean, I know we ignore it now.
Yeah.
But it's back at 80 plus already.
No, I think that was a real surprise because the way Brent cracked around 70 or so, I had a target of 65 on Brent, and I still think it will come. But the fact was that it would have a lot of good spin-offs for Indian corporates, profitability, and a lot of other such areas. Get with low prices, especially in the commodity space. But Brent has surprised. Yeah. It came to 85 or so. Right now it's 83. I think up to 90 or so, there's a lot of politics also around this whole Saudi, Russia, whatever nexuses that there are. But only beyond 90, I think it is a cause of discomfort. I still feel that the trend in Brent is down. I still have a longer term target of 65. We went to 70. But I do think it will drift lower. But yes, in the short run, also what happens with commodities and all these places, commodities, you will find that in bond yields, you will find that in the dollar, that they're extremely oversold. You see, they've had a one-way down ride for the last 3 to 4 months. So when these things get very oversold, they're not very, very strongly trending. They tend to have a bit of a reversal or a pullback. So the fear is that yes, they can have a pullback, more of an oversold rally, but I do think that the trend is lower for these asset classes and this will benefit equities. It can get delayed, but I don't think it is going to get denied.
What about Dr. Copper though? Sorry, before that. Yeah.
I think metals also are interesting. I know like we had written the end of metals, etc. But metals also in the last few weeks, they have been actually pulling up and they are making a base. As I said, they're not going to be the runaway that they were last year. But even if they remain at these nice levels, there would be opportunities. That is why we are playing the metal space through derivatives. It may not be the 3-4 large marquee metal names, but there are a lot of other industries that are linked or suppliers to these, and I think that opportunities are there.
I'm amazed when I see Bitcoin. It is supposed to be the leverage, the risk-off instrument. Right. You're talking about slowdown in the world, concerns of inflation, and here is Bitcoin which has popped right back up.
Yeah, it's the best performing asset class in the world year to date.
80%.
Yeah.
Yes, the best performing. In fact, Nikunj, what you rightly said, that everything is the opposite of last year.
Yeah.
Exactly.
The worst performing asset class is the best performing. Even you look at NASDAQ.
Yeah.
It got hammered last year. From year to date, obviously they are doing well. So, and that really
And your
brings
fund
down.
performance this year opposite of last year?
Yes. Last year was a difficult year. Last year was a difficult year.
I'm glad it's come back
because,
here.
Because it all comes down to growth and value. See, the whole ultimate trade was about growth and value. Last year was, growth done well decadally. And last year was pretty bad for growth. Very bad for growth. So everyone got caught in the reversal trade. But what you're noticing as bond yields have corrected, that the re-emergence of growth. And I think this is because we do a ratio chart between growth and value. We find that after a very sharp knockoff, and this knockoff or this underperformance of growth relative to value was decadal underperformance.
Yeah.
So that is why last year was a very, very difficult year for most asset managers. Because ultimately we are growth investors. In India, you
India
come
is
to
a
invest
growth
for growth.
investment, yeah. No,
So
fair point.
this year actually has started off very, very well. And a lot of the pain of last year has already been undone in the last few months. And as I see things playing out, I feel that you will see the re-emergence of this in a very big way.
What amazes me is another chart, and historically we've been programmed to think weakness in dollar, strength for emerging markets.
Right,
Weakness in
right.
dollar, strength for commodities.
Right.
Weakness in dollar, and you briefly spoke to Aisha about that. I was hearing the conversation. I may be out, but I always enjoy hearing your conversations. It is not playing out as per the script.
May not be perfect, Nikunj, but if you look at the bond yields, which are over 4, came down to 3.3. In that phase, you'll also find equity markets bottoming out. That October to now phase that we are talking about, you'll find that where the USD had reached to where it is right now. So all these two, especially the dollar and bonds, they have kind of corrected, and this has actually helped equities. The S&P 500 in the last 3 months has done a wonderful accumulation. And internally, as I've been saying, the number of stocks hitting 52-week highs versus 52-week lows has improved dramatically. So I think things are getting repaired. Yes, at an index level, it's a bit boring.
Intellectual level, you can say that. Yeah.
It's a bit boring, but internally things are changing, sectors and themes are changing, and I think this is a very good time for investors to rotate into these spaces.
Well, we've been not stock specific, but
I think we spoke extensively on
which
many
stock
themes.
did we speak about?
Nothing.
So no disclosures.
Electrical.
You're happy
I
your
don't know
time
what
is up.
stocks
I
we're
think we discussed themes because I said if you get your themes right, 70% of your work is done actually. I mean, in electrical equipment, how many stocks there are? There aren't many.
I can actually think of few.
Yeah,
Even the large ones.
Exactly, because what happens is that when sectors go through such a long period, there's a big shakeout. A lot of companies close down and get eliminated. What stands are a hand few. And when the cycle turns, these are disproportionate beneficiaries. And that's where we want to be as investors.
Fair point. Atul, always a pleasure to have you.
Thank you.
So, at least hope to see much more of you going forward.
Thank you.
What do we have?